Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Mahdalena Agustin, with NPM 244120025. Here I will explain the meaning of accounting, the function of accounting and the use of accounting as well as the accounting process. Understanding accounting, there are many definitions of accounting, including, American Institute of Public Accounts, AICPA. Accounting is the art of recording, classifying, and summarizing financial transactions and events expressed in currency units, American Accounting Association, the process of identifying, measuring, and reporting economic information to enable firm and clear assessment and decision-making for those who use the information. Haryono Yusuf, accounting is the process of recording, classifying, summarizing, and reporting financial data in an organization. From the definitions above, it can be concluded that accounting is the process of identifying, recording, and reporting economic data or information that is useful for assessment and decision-making. There are several accounting functions, namely 1. As a company benchmark, which means that every company transaction that is recorded and reported in accounting must be good and correct. 2. As an information system. As an information system, it refers to financial reports that must provide benefits to decision-makers regarding the company's current condition. This means that accounting is needed to compile more accurate and reliable financial information. Information systems are very useful as a tool for collecting data about a company's business transactions and activities. 3. Calculations in tax payments. To calculate the amount of company tax, data is needed to prepare financial reports which are the basis for calculating taxes based on annual profits at the end of the year. 4. Determination of company activities. The function of accounting is to determine the company's activities by adhering to financial reports so that the company can allocate funding sources to pay short-term and long-term debt and other needs. 5. Calculate the company's profit or loss. The accounting function for a company can be to measure the achievement of profits that have been targeted each year. 6. As investor control. From these financial reports, you can find out the condition of the company's capital. If a company wants to increase production capacity, add company branches, or other activities that require additional capital, then comprehensive financial reports will be needed. Accounting process. The stages of the accounting process or accounting cycle are 1. Identify transactions. Identify each transaction. The accounting transactions that you record are transactions that directly affect changes in the company's financial status. To carry out identification, transactions must also contain transaction documents. 2. Analyzing transactions. After recording transactions, the next stage of the accounting cycle is to check each transaction that has been carried out. Because, in making decisions, transaction analysis can have an impact on the company's financial situation, the double entry system is used in accounting as a recording method. Therefore, accounting transactions affect financial debits and credits in the same way. Systematically, using equations such as assets, liabilities, equity. 3. Recording transactions in a journal. A journal is a chronological record of transactions over a certain period of time that is useful in accounting. Meanwhile, journaling is the act of entering this information. Without omitting any transactions, you must do the recording systematically and carefully. So, you will receive the same debit and credit amount at the end of the period. 4. Posting the adjusting journal to the general ledger. A general ledger can often be thought of as a group of bookkeeping accounts that detail specific assets reported in a period. At this stage of the accounting cycle, certain code numbers are assigned to each account. In the ledger, the aim is to facilitate the identification process in the journal. 5. Prepare a trial balance and adjusting journal. The general ledger balances are unified and must be in the same state when creating a trial balance. Apart from that, you must make a recording in an adjusting journal if it turns out that some transactions have not been recorded or if you find errors in the trial balance. 6. Create an adjusted trial balance and financial reports. The trial balance book that you created previously by paying attention to the adjusting journal is the basis for preparing the adjusted balance sheet. Depending on the position, the balance is divided into assets and liabilities. Then you arrange it so that both balances are the same amount. 7. Prepare closing journal. At the end of the accounting period, you make this closing journal by closing the nominal account or profit and loss account. You can close both accounts by setting the value of each account to 0. This account will be closed to view flows at source for the current accounting period. You can use this closing journal to evaluate every action you take during the period after the account is closed. In the next cycle, closing entries can help a new start for the next period. 8. Preparation of post-closing trial balance. After you have made the closing journal, you will then prepare a trial balance. The contents of this trial balance are a list of general ledger account balances that exist after the closing journal entries. 9. Keep a turnover journal. Reversing journals are created to make it easier to record certain transactions that will occur repeatedly in the following period. That's all from me, and thank you. Wassalamualaikum warahmatullahi wabarakatuh.